is Karen Polanco and Oli
Hi guys.
and Raul.
And Mr.
Hello,
Raul.
good morning.
And I'm with House Karen Polanco Real Estate Team and EXP Realty and SunWest.
And we are SunWest Mortgage, Oliverio Perez, Oli the mortgage coach, and Mr. Raul. We are here to kind of give you guys some quick tips in regards to your tax returns to be able to see what we can do to assist you or kind of advise you to be in order to be able to qualify for a home in the traditional sense in regards to lending.
So the reason we brought this on is because as a realtor, I deal with people that think that they make so much money, maybe, and they do. However, on paper or when they're filing their taxes or in their tax returns, there is a big difference on how much they grossed to how much they net and how much they brought home. So somebody that's on a fixed income, like getting W-2s, their taxes are being taken out, every paycheck. That's not the type of, that's not why we're bringing this up. We're bringing it up for the people that don't have a fixed income, for people that are on a tipped wages, people that get paid cash for a lot of things, business owners,
Yes.
and especially people that are on 1099s, where you actually have to pay your taxes at the end of the year. So really quick a personal story of mine is I was getting ready to buy a house. It was a higher priced house, and I went to go do my taxes. I'm sorry, or actually not do my taxes, but do my mortgage loan. And I was very blessed that I had a lender that was also a CPA, who told me, you're gonna need to wait about 2 years to file your taxes this way, and you're gonna have to not claim so much and not have so many deductions in order to show that you're making more money. So for 2 years I waited, and we still worked together, and I would take him my tax return, and he would sit down and tell me what to claim and what to not claim, and how much money I needed to net in order to be able to qualify for the home I wanted. It took 2 years, but it was awesome to have that relationship with somebody who knows taxes and also knows the lending side. And I've dealt with it myself with dealing with people that are in the same boat, and they have never been told how to file their taxes accordingly. So that's the reason for this program. It's not to file your taxes or come and file your taxes to buy a house. It's to show you how to file your taxes correctly.
So the best bet in regards to Ms. Karen being blessed and being able to know lenders that are also tax preparers to kind of help her. And she was very lucky to be able to have that guidance, and she wants to reciprocate that gift to all of our potential clients or even current clients or future clients. And that's where we are here to kind of assist you in regards to how to kind of coordinate with your tax preparer, what to reflect in regards to your expenses. Because every person's different, we have to plan accordingly. I have to make that disclaimer out there. It's not all the same because not everyone's the same. Every person is like every home, like every business. It's very different, very unique, and that's why we have to set up that one-on-one meeting so we can be able to assist you and kind of guide you the right way. And Mr. Raul and I have been both tax preparers for various years. I used to work for CPA for 10 years. Believe me when I see the stresses and taxes and how we can have great monthly deposits in regards to your business, but at the end of the year, you have very little income. Why? Because we all want to pay less in regards to taxes, or you actually have those expenses, and we have to be able to see what kind of game plan we can create for you to start structuring yourself and organizing yourself as a business for that future endeavors. Because you don't know if it's just a house you're going to buy, a house or multiple properties, if you're going to become an investor, or if you're going to buy big properties in regards to like big rigs. If you're like truck drivers that are out there, they're 1099. Especially because I know at the end of the year, they give you that big old net sheet of all the fuel, the insurances, the meals, all that good stuff that goes with it. We are here to kind of help you see what your purchase power can be. And we want to make sure that we start off with the number one thing is this: what's a comfortable monthly payment? What is the home that you're trying to get? What is that purchase goal that you're trying to reach? And what we can do all together to make sure that you get that process going so you can attain that goal that you're trying to get at the end. So.
Yeah, so as both of them elaborated, when we come across self-employed buyers, yes, you might have made $120,000 before expenses, but what we have to take into account is how much of the income is after expenses. That is one of the things about taxes that is a double-edged sword. Sometimes people approach us and they say, hey, I have a very profitable business, but like Oli was saying, they're trying to obtain a certain qualification for XYZ home, but every situation is different. Maybe there's too much monthly debt and we need more income to be able to qualify. That is what we sort of specialize on, in guiding individuals and letting you know, hey, for you have this much of monthly debt, and this is what income you're gonna have to do. Most of the programs that what we call traditional loan programs, which are FHA and conventional, are gonna require a 2-year average for self-employed people or people that are typically a Schedule C or business owners. Apart from that, we also have what's called non-traditional loans to cater outside of the tax income, and this is going to be things such as bank statement programs, investor, rent programs, and that type of good stuff. So some of these individuals that we're speaking about are people such as truck drivers, landscape, plumbers, contractors, and sometimes servers that have cash tips, and also barbers, anybody and everyone that's not a W-2 employee. So again, to reiterate, yeah, you can make $150,000 before expenses, but if you wrote off $100,000 in expenses, you only made $50,000, and that is what lenders have to use for your income to average out over 1 or 2 years. So we come into these situations quite often where unfortunately we have to tell people, hey, we need to not take so many expenses in order to qualify to have a greater net income. One of the really cool programs that we have, or various cool programs that we have to cater to self-employed individuals, is stuff going off of bank statements and 1099s. These are called non-conforming products, and we don't go off of your stated income on your tax returns. We go off of how much you're making in 1099s before expenses, how much is flowing through your bank statements. This is how we derive your income. Most of these have really good, attractive interest rates, and also low down payment requirements as well.
So one key thing is about these programs is the debt to income ratio. When we're talking about traditional programs, we're talking about your standard conventional VA, FHA, and we have to have, at least for FHA or any kind of government program, we have to have 2 years of registered income from your business, and we have to kind of average those 2 years in order to kind of come out what your average monthly income would be. We would have to base it off of that amount to be able to see what you can qualify for. We have to take into consideration all your debt. For all my self-employed individuals out there, you guys have a lot of either vehicles or machinery or equipment that is derived from your social security number instead of your EIN, and a lot of people do this. So we also want to be able to kind of review your information to see what's being reported under your name rather than your business name, because that could also detriment your ability to qualify for that $600,000 home. So we also have to take that into consideration. Like I said, everybody's different, but we also want to make sure that with our programs that we have that are non-QM, that doesn't really take into effect. It goes off of your deposits, your gross 1099s, or in regards to what you have available for the down payment, because these non-QM programs do require a sizable down payment. It varies in regards to property and price, also your scores. The good thing is that our scores start off at a 600 score and up, which is unheard of. You guys really want to be able to take advantage of these programs, because this will be able to help you in regards to, like, every business owner, every 1099 person that's out there or self-employed. We want to be able to expense everything that we have, but we show that little income. And this is kind of a good alternative to be able to qualify for those great homes that Ms. Karen can show you. Now, back to the traditional sense. When we're starting to talk about what you're trying to report, whether it's for Texas or New Mexico, because we're right at the cusp of the border between both, you guys can set up a consultation between Mr. Raul and myself to be able to kind of guide you on what you're trying to attain. Every person is different, every state is different. So we have New Mexico state income tax, and it kind of goes into different tiers, because I kind of read up on that a little bit earlier in regards to your full resident, part-time resident, and your first-time resident, meaning that you just barely moved. So if you barely had income here in Texas, but you just barely purchased a property, let's say in the beginnings of December of last year, where are you in limbo? It just depends on what income we're going to be able to show on your end, and how we report it for both your federal and for your state income tax. That's why we need you guys to come talk to us to be able to assist you to get you going further. And like I said, and if it's not just us, you can talk to your financial tax preparer, the one that helps you out for the various years. But we have to have a game plan to be able to see what you're trying to do, what you're trying to attain. That way we're all going to the same goal, because it's easy to kind of deviate from it. And one thing is we have to be is consistent, to make sure that we consistently show earnings what your expenses are, how you report them correctly in order to get what you need to get.
So with that said, it might take a little bit longer, and the reason we brought this is because I'm here, we're all here, we're not going anywhere, and if it takes us 2 years to find you a house, that's okay. It could take longer, it could take less, but people don't know this going in, and why would you if it's your first time home, especially if it's your first time home. You made a lot of money this year, but then you go to say, okay, I made this much money, I want to buy a house, and it's not showing on paper. So our main goal is to show you how you get into that house with doing your taxes properly, because if you don't do non-traditional, or you go the non-traditional, there's so many different programs. But if you are doing the traditional way, FHA, first time home buyer programs, all of those are going to require a certain amount of income. And 2 years working in the same industry.
Correct.
As well as 2 years of pretty much to the same income.
Correct.
Right.
Like I said, consistency. Whatever income you reported, make sure you make it or equal or more. If you drop in regards to your income more than 5%, that can hinder your ability to be able to qualify for a home. Definitely want to kind of keep an eye on that. And they say if you do get a sizable tax refund, just don't go out and just go party. Don't go out buy this all great $10,000 Gucci bag that matches your clutch. And why I know that, I'm just gonna tell you, presents for Christmas were awesome. Don't do that. Well, I want to make sure that you guys have an investment that's gonna last you more than just a week or more than just a year, because vacations last only a week. Yeah, the memories are a lifetime, but imagine the amount of memories you can make at your home. We want to be able to captivate that. We want to be able to encompass all of that, your dream of home ownership, and make it a reality. It's just we have to set you up with the right team, and that's what we're here for.
Right. And that's one of the reasons I work with Oli and with Raul, is because I need that specialty on the tax side as well as the lending side. And what better to have it both in one person.
Exactly.
Or two people.
And two people.
Yeah. So I think that's it. If you all have any questions, we're here forever. We're not going anywhere, and I know that people haven't filed their taxes yet. If you haven't and you're looking at buying that home, come to us before you file your taxes.
Yes.
Because we don't want you to have to wait another year to file correctly. Let's get it done now, and even if you already have filed your taxes this year, we can kind of go off of that and tell you what to change maybe a little bit for next year.
Exactly.
Okay.
And thank you guys very
Thank
much
you.
for your time. Appreciate you. Thank you, Ms. Karen.
We will talk to you soon.
Thank you guys.
Bye-bye.
Bye-bye.
Bye, guys.